Hello traders, here's how I caught up a trade on GBPUSD. So, how was it going? We're recording a series of break of structure, a BOS down here, a break of structure here, a break of structure, a break of structure. What's it telling us? It's telling us that there's going to be a trend continuation. Good. And we're looking for a perfect area to enter the market. We couldn't enter from here. But we're looking for a perfect area. Thereby, we found out this strong imbalance that came with a break of structure. For the SMC traders, where we talk about the order block and the FEG, fair value gap and all. So now, we took this trade from the FEG, which was here. We took the trade from the FEG here. And now, tell me, what do you think drew the price to this your FEG? What made price come to your FEG? Good. It's your structural liquidity. Because I said it in my last video that the structural price will always leave a structural liquidity or a liquidity behind to be taken out later on. So the liquidity now will be a magnet. It's going to be a force drive that will eject the liquidity to this your zone here, to this your POI. Because why did I draw this POI here? Why did I draw this my FEG? I drew my FEG here because I knew that I was having a structural liquidity. That price will only just come and sweep this structural liquidity, tap it to my block and reverse downwards. So that was what I decided. Thereby, I drew this curved line. What's it called? It's called your liquidity pool. Lots of liquidity here. There are lots of liquidity. Okay, remember, I didn't draw this zone. I didn't mark out this zone, this FEG. It fulfilled the criteria. Like an FEG must come with an imbalance in the market. This alone is an imbalance. Okay, it's an imbalance in the market. It's used an imbalance to break a structure. So that's why we took it. And also, we left out a liquidity behind to be taken out later on. Okay, so I had to set out my zone. I think I was aiming for 79 pips or so. Yeah, I was shorting. I was aiming for 79 pips here. Also, then I was risky, and always set out your zone above your block. It is very necessary. Set it above your block. Don't set it here. Set it above like this, because the market can do anyhow. So I was risking 16.3 pips, aiming for 70 something pips. So here was how I caught up this trade on GU. Follow for more. Remember to turn on your post notification bell, and also I'm going to be making a video on the trade I took on USD CHF. So I want you guys to stay tuned, and don't forget your block or your zone and your structural liquidity. And also note that your structural liquidity must not be far from your block, must not be far from your zone. Don't forget, whereby you have a structural liquidity here. You're having a structural liquidity here. Let's assume here is the structural liquidity. Okay, some minute please. Let's assume here's your structural here's yours. Okay, we had a break of structure like this. Okay, structural liquidity is now here. Are you seeing it? It's not there. Okay, and probably you've marked out your zone. You've marked out your zone. For example, you marked it here. Okay, it's a bit far. You can see it's a bit far. Okay, it's a bit far. Are you seeing this? Are you seeing this? It's a bit far. Price can just tap into it like this. Price can just come up. Price can decide to come up. Come up, sweep it a little and reverse downwards. Or price might just like break through that your zone. It could just break through that your zone. So in order for your trade to be safe, I suggest that your structural liquidity must always be close to your block. Rule number 1, have a strong imbalance. Let's have an imbalance as your break of structure, thereby having a good and approachable structural liquidity, not just anyhow structural liquidity. So after making a video on USD CHF, I'm going to also make a video on the structural liquidity, thereby the Fibonacci comes in. So stay on, guys. Turn on your post notification bells and subscribe for more videos.